May the gods keep the wolves in the hills and the women in our beds.
Hey everybody, and welcome back to Milkshake's Markets Madness. This is our Monday peak of the week. It's a short week, it's Thanksgiving weekend, but normally we will do a Monday video to share the upcoming economic calendar with you and give you some thoughts of our own on what's worth focusing on and what potentially could transpire as that information comes out. Like I mentioned, it's a short week. Perhaps maybe the most important thing, if really the only thing that's worth much attention, is the Fed minutes. Brent, we on our weekend episode and really the last, I'd say, 2 weeks of recordings that we've done have emphasized the fact that there's been these very strong reactions to Fed-related data, whether the Fed is choosing to pause non-farm payroll and then CPI last Tuesday or this past Tuesday. All of these things have really turned into maybe it's lacking objectivity and just has been an excuse for the markets to melt up. Do you think there's going to be an effort in the Fed minutes to kind of cool some of that down?
Well, that's a good question. I feel like the markets have got ahead of themselves. It doesn't mean that they're going to crash. I just feel like I kind of feel like the market has overinterpreted. So not misinterpreted, but just overinterpreted. So I think there's the possibility when you read the minutes that perhaps there's some comments in there or a few words and the funny thing is people parse every single word, right? And if 3 words have changed, that can be a big deal, which I admit is kind of ridiculous, but hey, this is the world we live in. But I think there is the potential for the minutes to kind of not necessarily put a kibosh on everything, but unless there's something dramatic in the minutes, like dramatically dovish, I don't see how the minutes send the market higher, right? Because I feel like the market has already front run everything being dovish the rest of the year. And so I think it has the potential to be an interesting week because number one, it's probably a relatively, not illiquid, but it's a light week because people will be traveling and, by the time, people will be in the office Monday, they'll start to leave Tuesday, Wednesday will be very light, Friday will be light. So, when you have these weeks where there's not as many market participants around and trading, every little bit of news, if it comes out either a big miss or a big beat, has the potential to move markets. And I think unless the Fed minutes are explicitly dovish, I don't think the markets trade higher on it, and they have the potential to have them pull back a little bit.
Well, just to fill in some of the blanks, not that it's very heavy data, but the Fed minutes will be on Tuesday, as will home sales. The home data this week was slightly positive. So that's another one of those markets where I feel like all year long, everyone, is calling for de-dollarization. Man, people just can't get enough of calling for a housing crash, and the housing market just does not want to cooperate with that narrative. Wednesday, we have jobless claims. It's going to be more of an interesting one to look at than previous weeks because the most recent non-farm payroll had a slight uptick in unemployment, which we really haven't seen all year. Durable goods orders could give us some sign as to how the consumer is feeling and what kind of spending they're up to. And then consumer sentiment. I mean, sentiment kind of drives everything, that and expectations. Has there been any kind of chatter as far as where sentiment is headed? Or do you think overall, the hard data matters a little bit more right now?
I think it's a little bit of both. And again, I think sentiment had gotten pretty low pre-Fed meeting. It wasn't at record lows or anything, but it was pretty low, and it was getting close to really low. But we've just had such a massive short covering rally and just short squeeze and euphoria in the markets for the last 2 weeks that I feel like sentiment is now it's swung from very bearish to very bullish again. And it's kind of funny to see these big swings so quickly. And it's just, this is why if you don't have a long-term framework, you just get cut to ribbons. Unless you are like a very adept day trader who goes to cash every night and doesn't have these big positions out there. These markets, you can make a lot of money if you're very good and very nimble, but you can also just get cut to ribbons. And I think, I would guess that there's a lot of people who were very happy to have the market sell off in October. Like people, financial advisors who were trailing the market were very happy to see the market sell off in October because it was coming back to them. Unless they got long, they are feeling the squeeze really hard right now. And they have so much FOMO. And I think that FOMO is probably what led to the euphoric buying on Tuesday, last week and then again this week. And again, unless there's new stimulus or some new catalyst to give them more FOMO, I don't know that the market continues higher. It's very possible the market just goes sideways into the year. I think, we've talked about this many times, violently sideways. It wouldn't surprise me at all if we have 3 to 5% moves in both directions between now and the end of the year. And it could be dramatically lower, or, maybe we get this melt up. I am not in the melt up camp, but, never say never. We're in those types of markets where kind of anything can happen.
Well, speaking of sentiment, and certainly, equity markets outperforming, one of the stories for at least the second half of the year, but for really most of the year, has been the Magnificent Seven. You've had, more or less 7 stocks carrying the whole majority of the indexes, and those are all primarily tech-driven stocks. What's interesting with the sentiment component and the tech-driven component is this week we had kind of surprise news that Sam Altman, the CEO of OpenAI, which created the ChatGPT AI kind of craze recently. And then, in line with that, you have NVIDIA and a lot of these other tech darlings that are performing. But he was announced to be stepping down from CEO and from the board of OpenAI. And there hasn't been much color on that yet. So it'll be interesting. Do you see news like that maybe making paper hands a little nervous about their tech holdings?
Well, it could in that, the NASDAQ is basically back at its high of the year, and NVIDIA is back at its high of the year. Tesla had a big bounce. Earlier, a couple months ago, we said that we thought Tesla was done for the year and had seen its high, and, we had bought puts on it and it sold off hard. It's had a good bounce. I think Tesla rolls over and sells off into the end of the year. But this whole Sam Altman thing, it's just so weird, right? It comes out on a Friday, kind of in the dead news zone. And why does it happen then? And, it'll be interesting. I'm sure like over the weekend, everybody will be trying to figure out what really happened. And if for some reason what really happened has something to do with another company, or has something to do with the business itself, or it had something to do with the results that AI, OpenAI was giving. Again, I'm totally speculating here. But again, when you have these markets that need a catalyst to push higher and you don't get one, or you get a potential negative catalyst, that's when you can get these rug pulls. Again, this is not a prediction. Earlier this week, I think at the beginning of the week, I made the prediction that the market would not go higher than it was on Tuesday. So far, that's right. We'll see if that ends up being the case next week. But when you have a light week, it's a travel week, people are out of the office, and you got a couple news things that come out, crazy things can happen. So I don't think that this is a market where you can just like turn your computer off and go away for the next 6 weeks and, everything's going to, and it's going to be smooth sailing. I think we're going to have a lot of volatility between now and the end of the year.
Well, we'll see what happens. We'll hang in there and keep people posted as things evolve. It's a holiday weekend, or a holiday week for us too. Hopefully you enjoyed this Monday peak of the week. We are undecided still as to how we deliver the weekend content, as well as a potential midweek update after the Fed minutes. But don't worry, we'll bring you something here. For now, enjoy the start to the short week. If you don't hear from us by some random chance, enjoy your weekend. But like I said, we hope to be delivering you at least a midweek or heading into the weekend early, some type of content. Either way, good luck out there. It'll be an interesting week, slow perhaps. Maybe there'll be a catalyst to make it a little bit more exciting. Either way, we'll see you guys real soon. In the meantime, you can check Brent on Twitter at Santiago AU Fund. You can follow up with me at John Kutsmeda. And you can enjoy content and commentary from the show, both on YouTube and on Twitter, using the handle Milkshakes Pod. That's it for the Monday peak of the week. We'll talk to you guys real soon.
Communication breakdown, it's always the same.
This show is provided for entertainment and informational purposes only. It should not be relied upon as legal, business, investment, or tax advice. Neither the hosts, guests, nor any funds they may manage intends to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies.